Hey everyone, welcome to Modern Thinking. Welcome to Modern Thinking. The purpose of our channel is to provide simple to understand content that breaks down each topic and helps you understand the concept rather than just understanding the definition behind each term. Challenge yourself, encourage yourself to grow, and you will see your limitless potential. With that, let's get started. Let's start our financial journey today by understanding the concept behind taxable income. If you are a working individual, more than likely you're paying taxes. So, do you know what tax bracket you fall into? Or where exactly does your money go? Let's dive right in. There are 7 established tax brackets in the United States, and the following is what is current for the 2020 through 2021 year. We will make this simple and assume that you are a single individual filing taxes. For those that are married or for those head of households, please take a minute to research your respective category's tax rate. It will be very easy to research, so follow along. Anyways, to continue on, if you are single and make between $0 and $9,875 a year, then you will fall in the 10% tax rate. If you make between $9,875 to $40,125, then you fall into the 12% tax rate. If you make between $40,126 to $85,525, then you fall into the 22% tax rate. If you make between $85,526 to $163,300, then you fall into the 24% tax rate. You get the idea. Basically, it keeps going up the more money you make, all the way up to the 37% tax rate. So go ahead and check your annual income and see where you fall in. Now here's a twist. For example purposes, let's say that you make $55,000 a year. That would mean based off your income, you fall within the 22% tax rate bracket. The common misconception is that you will pay 22% of that $55,000 income of yours, which equates to a massive $12,100 tax. That's ridiculous. Now, here's some slightly good news. You as a taxpayer would not pay the 22% rate on that entire $55,000 because taxable income is actually taxed on a progressive rate, meaning the rate on the first $9,875 of your $55K income will be taxed at 10%. Then the maximum amount on the next tax bracket will be taxed at 12%. In this case, that is $30,251. That's because $9,875, which is the max amount on the 10% tax bracket, plus $30,250 equals $40,125, which is the max amount on the 12% tax bracket. So that means the remaining amount of $14,875 will be taxed at the 22% tax bracket. Wow, that was a lot of math. So if you don't remember anything from here, just remember this. The marginal tax rate that you were at with a $55K income was 22%, and you would have owed $12,100 in taxes alone. But because you are actually progressively taxed, your effective tax rate is closer to about 14.3%, which means you actually owe $7,890 versus the original $12,100. Still, we work hard for our money, so what exactly are we paying for? Number 1, let's start off with federal taxes. Federal taxes are standard across the board, but they are adjusted each year to keep up with inflation. Simplest way to think of it is as your specific tax bracket. If you're single making $50K a year, 22% is your federal tax bracket that you pay in federal taxes. Number 2, next is FICA. FICA stands for Federal Insurance Contributions Act. As you work and pay into FICA, you earn credits towards Social Security benefits. To be specific, 6.2% of your gross wages goes to Social Security tax, while an additional 1.45% goes to Medicare. Your employer then actually matches those same percentages, providing you with a total of 15.3%. Now, Social Security and Medicare provides benefits for retirees, the disabled, and children. Moving on, number 3. Another area that our money goes into paying is into our state of residence. State tax does not tax income. Instead, each state has their own tax rate that is intended to help fund state budgets. Those are taxes that may be paid for that new road, or that new bridge, or even the renovation of an older or historic community. Some states have no state taxes, other states have flat state taxes, and then some have the progressive tax rates where they tax you the higher your income. Number 4. Then you also pay into local taxes. Local taxes apply to people who work or live in the locality. It's geared mostly towards funding public services like education, property taxes, sales taxes, or even sewer maintenance. Taxes, taxes, taxes. We are conditioned to pay taxes, yet nearly half of the population paying taxes have no idea what it actually goes towards. Do your due diligence and understand how much you pay and what it pays for. Once you have that concept down, you need to figure out what tax exemptions or deductibles you qualify for so that you can pay a much lower tax rate than the one that you are currently estimating right now. It's out there and it's legally possible. Knowledge is power, so turn on that thinking cap of yours and see how much money you can save. Thanks for watching, everyone. Be sure to leave a comment, like, and subscribe to the channel and start your journey to financial freedom today.